Welcome to Subramani. We have more or less established that we are in a bull market and we are going to be in a bullish market unless BJP does something disastrous and loses the election. This is an election which they have almost won. If they don't do anything foolish, they're likely to come up with more seats than what they got last time. I'm not going beyond this. I don't want to make it more political. So the question is, what should you do as an investor? So first of all, 2002, many people may have lost money. So in 2022, many people may have lost money in the market. Market was not so clear about what is happening. Especially in the US, the interest rates went up dramatically. So people saw a lot of losses. So whatever it be, in 2023 December, we are talking about what to do with your portfolio. We are in a bull market, there is no doubt about that, and most of the sectors have participated. Some sectors may have participated more, some may have participated less. Smaller software companies may have participated more than a TCS or an Infosys, but an HCL has definitely participated, right? So banks may not have participated, but some NBFCs have definitely participated. So finding out which parts have participated and which parts have not participated is not very difficult. So if you have those parts where there has been a lot of jump up, maybe 35%, 40% jump up in the last 1 year, taking some money and putting it, well, I'm jumping the gun. So let's go step by step. First of all, check where you stand in your portfolio, how much you have in equity, how much in gold, how much in debt, and are you comfortable with that? Because that is far more difficult to answer. Are you comfortable with the position in which you are financially speaking, or are you worried? If it is giving you sleepless nights, it means you've got too much money in equity. Get rid of some equity and get rid of a lot of equity and get into a hybrid funds, or get rid of little bit of equity and get into debt funds, whatever. Look at your, we will cover taxation also, so make sure that the shift that you make is not foolish, but it is thought of. So check where you're standing. Are you happy in the position in which you are? And this includes checking your asset allocation. When you're checking your asset allocation, especially in a bull market, the chances are your mind will tell you what is the harm. Let us keep more money in equity, because every day that you hold, the prices are only going up. Subra bought BHEL at 25 and he sold it at 135, and today it is 147. So see, it does not look very smart. Well, I sold it partially, that is true. I spoke about it in other videos, that is also true. And the chances are I booked profit, and the chances are it's gone up after I have sold. If I had bought, it would have still gone up. If I had sold, it still goes up, right? I cannot wish the other way, saying, oh, this share which I have bought should go up and this share which I have sold should go down. That's ideal situation, never happens. It's only in fantasy land that it happens. While you're doing your asset allocation in a bull market like this, think about creating a special, maybe a 50 lakh corpus as a separate fund for emergency medical expenses. Why am I saying this? Because recently I'm seeing somebody incurring about 2 lakhs of rupees, about 1 lakh rupees on the nurse alone, and plus the bed, which is a hospital bed, which is motorized hospital bed. I think that costs about 1 lakh. So they bought that, right? So then the medicines and the trips to the hospital, etc. I'm putting it as 2 lakhs. I'm assuming that you require it for 2 years, so 50 lakhs. So keeping 50 lakhs in a fund, which could be an equity savings fund or something like that, because you want some equity, you want equity taxation, and you don't want debt taxation of being added to your current income. Of course, you can go for a growth option, but if you put in an equity savings fund where you get a lesser return, but the chances are you can build up that corpus of 50 lakhs, saying this corpus is earmarked for my medical expenses if I am admitted in hospital or if I am at home. The advantage of this is your brain does not feel that, oh my god, 50 lakhs has gone out of my 20 crore portfolio. Maybe you have a 20 crore portfolio, or maybe you have a 5 crore portfolio. You don't feel that got depleted because you took the money out. It's completely psychological. It is your money. You have a 2.5 crore net worth. You have kept 2 crores separately and 50 lakhs separately. then your mind tells you that 50 lakhs is already earmarked, so don't worry, even if it goes to zero, it doesn't really matter because that is for spending. Out of this 2 crores, nothing should go. That is the corpus that you're trying to protect. Sounds odd, but look at it that way. Even in asset allocation, if you have some money in liquid fund and some money in ultra short bond fund, I would recommend keeping it in 3 different fund houses, because I have recently had problems of not being able to withdraw from one fund house because their website was not working. Next day it worked and I could remove the money, but we keep money in liquid and ultra short not for getting great returns but for liquidity. So if somebody cheats you of liquidity in those funds, they are committing a crime. But anyway, can't cry over spilt milk. Go and put your money in 3 fund houses rather than 1 fund house. And of course, you should have some bank deposit also, because everything is now getting taxed the same, right? So so you see the liquid reserves, how it is kept, where it is kept, how can you access, how much is the limit in your credit card, because if your credit card has a big limit, my credit card has something like 30 lakhs limit. I know in a worst case scenario, for admitting somebody in hospital, I can use that limit, get that person admitted, and next day go and replace that or ask that person to pay up to you because you've used your credit card, right? So this can happen. You can even go to the same hospital and reverse the charge and pay by check, but then that will cost you money. It's not worth it. You might as well suppose you have admitted a neighbor in the hospital and you have to pay 2 lakhs as deposit, etc., and you paid it from your credit card. Perfectly all right. Next day morning when you get the money, when your neighbor gives you the money, or next week if he's in a good not in a great frame of mind, next week or 10 days later you will get back that money, right? So use it for that, use it for an emergency, whatever. So check out your asset allocation and see whether you're happy and whether it is in the correct places which allows you to withdraw in 2 minutes, 5 minutes, whatever, right? Check how your own portfolio is doing. Don't be happy that the portfolio which is doing well, the fund house in which you like, they have a fund which is doing well. Check out how you are doing. When did you enter? When did you exit? For example, I invest in 2 pharma funds. In one pharma fund, I am doing an SIP. In the other pharma fund, whenever I think pharma does not look well fully priced and it is a good value investment, I go and put some money. So I dump money in both these funds, one on a regular basis, one on an ad hoc basis. Both have done well. And for me, that is my fourth box, which is for an emergency medical funding, which is not paid for by the insurance, right? So do that. Check your portfolio and see how much you're protected for inflation. I expect inflation to be benign in India. It will only go down. I don't see it going up in a great hurry. Check what are your how the shares are in your family names. If you have some shares which you are bought in your wife's name, which is now showing a loss, and you have some money and you have some shares which you bought in your name, which is again showing some loss, it's very good time to be doing some tax harvesting, right? So get rid of the shares in your wife's portfolio, get rid of the shares in your portfolio, and buy it in each other's portfolio. It doesn't really matter. So what you're doing is you're booking some part of your profits and some part of your losses also. Who wants to carry it forward for 8 years, especially in a bull market like this? So book partial profits and check out on the taxation front as to what you should do. So obviously that means you're attending to your tax matters. In fact, I would think if you have a dividend income and capital gain, check out whether you're paid adequate capital gains tax. I think I've paid a lot of tax, but I think I may have underpaid, right? So check that out, check your tax matters, check whether you filed your return a little late perhaps, but keep everything ready to file your return maybe by May or June, by the time the forms come, etc., etc., etc. So do all that. So attend to all these things in a bull market, and that's what you can be doing. Thank you.